Hello and welcome to Moneylife. This is Cheeta Dalal. This week I have a stunning story. It is about a complainant, not any ordinary person, but a large corporate group, well known, Dalmia Bharat in fact, and its managing director, Puneet Dalmia, who was a complainant in 2019. Alleged fraud said that 350 crore of mutual fund units had been stolen, and 7 years later, the story has completely turned on its head. Again, not because I say so, but because of an investigation by the Serious Frauds Investigation Office. We're going to call it SFIO. Doesn't stop at that. The SFIO uses these words. It says it was a false complaint which has unraveled, and let me tell you how. So it began in 2018-19. It was a 350 crore fraud complaint in the aftermath of the collapse of IL&FS. IL&FS is Infrastructure Leasing and Financial Service. This massive conglomerate of 340 odd companies just imploded and created a systemic shock. In the aftermath of that, in Jan-Feb 2019, Dalmia Cement Group, or Dalmia Bharat Group, filed a complaint with the market regulator, SEBI, the Economic Offences Wing of the police, as well as the National Depository, claiming theft and fraud involving mutual fund units worth 350 crore. The complaint implicated IL&FS Securities, Avnish Kumar Mishra, who operated a partnership firm called Money Mishra Financial Services. We're going to call it Money Mishra, and Allied Financial Services Private Limited, which was a small brokerage firm. IL&FS Securities was the clearing member for this firm and had done things to clear it. All small brokers need a clearing member because NSE has a few large clearing members. Not all small members are part of clearing. That's not relevant to this story. Now, what happened 7 years later after 2019? The SFIO report categorically says these complaints were false. On the contrary, it says that Puneet Dalmia, managing director of Dalmia Bharat Group, had pledged the securities in consideration earned illegal fixed income of 40 crores through entities controlled by him with the names like Coin Tribe and Winmay. They were promoted by him. This is a pretty shocking allegation by the SFIO. It didn't stop at that. Some of you who follow Moneylife know that in Jan this year, the Ministry of Corporate Affairs directed the SFIO to initiate criminal prosecution and other enforcement actions against the promoters of Dalmia Bharat Group. Specifically, it named Puneet Dalmia, Gautam Dalmia, Yadu Hari Dalmia, and others. Some of them are employees. We have published that story some time back. Now we had access and an opportunity to look at the detailed SFIO investigation. And mind you, it's a nice big fat report which has turned the original complaint on its head. What is worrying is that it offers a grim study of how unchecked fraud can happen. There can be misdirection. You blame someone else. Then there is regulatory inertia, even after there's an SFIO report with damning findings. Now, as we go to press, Puneet Dalmia continues to head the group. His companies have reported strong financial performance, have made no disclosure about the SFI report anywhere to the stock exchanges or anything, in spite of the order by the MCA. So let's hear the story. I told you about IL&FS and how it was easy to blame IL&FS Securities because the whole IL&FS group had imploded. So it was okay to say they colluded with Avnish Mishra, the broker. Now, this was also a time when the National Stock Exchange had seen as many as 32 defaults. Not by 2019, it continued till 22-23, but by then 20 odd brokers had defaulted, primarily due to reckless derivatives trading financed by the misuse of client funds and securities. And thousands of people have lost money, and we have reported this extensively. So Avnish Mishra was doing the same thing. What did they do? These brokers, like Avnish Kumar Mishra, ran an operation offering a fixed return on money. Could be any, the amount was different. In this case, it was 2% per month, which is 24% annually. If an entity allowed shares owned by them or securities to be pledged with the brokerage firm as collateral for derivatives trading. Now, I've already told you IL&FS was the clearing member, so obviously Avnish Mishra had large trades. Several large unknown brokers became big at that time. Investors have lost everything, are continuing to fight. Again, those of you who have followed Moneylife know how much in detail we have covered that. We are now talking about Dalmia Bharat. So SFIO's investigation traces the origin of the whole Dalmia Bharat involvement to 2016, 2 years before the IL&FS implosion. What happened is that Avnish Mishra was introduced to Puneet Dalmia and his two finance heads, Jayesh Doshi and Bijesh Kumar Agarwal, who were then the chief financial officer and treasury head of Dalmia Bharat. Who introduced them? His father-in-law, Vinod Poddar. Vinod Poddar was already a client of Avnish Mishra and earning this 2% income, I guess. Now, in 2016, Dalmia Bharat opened three demat accounts with Allied Financial Holding, that little brokerage firm. I'm going to call it Allied Financial, for this 350 crore mutual fund units. What is important is that by that time, they hadn't even signed any agreements or done their due diligence. All that happened afterwards by 2015. A formal agreement was there. But before that, shares of OCL India Limited and Dalmia Cement East Limited were already, these mutual fund units were already pledged with Allied Financial. And didn't stop at that. SFIO says that because they wanted to keep a watch on what this broker did and how he traded, three viewing terminals were installed in the Dalmia Bharat offices to monitor every action of Avnish Mishra. Things don't work that way. Predictably, derivatives trading did not yield the promised returns, which means he ran up losses. He made a loss of 183.72 crore between April 2017 and February 2019. The FSIO report says the bulk of these losses were on Bank Nifty, 135.71 crore. They're more interested in the other part. 43.60 crore were on Dalmia Bharat Limited futures. Now, why did he trade on futures? And this again brings the nexus. In his deposition to SFIO, Avnish Mishra apparently said that Puneet Dalmia directed him to build positions in DBL futures. Why? Because he was anticipating that the price will shoot up after a proposed acquisition by Dalmia Bharat of Binani Cement. Again, things don't go as planned, so they lost the bid to Ultratech Cement. And DBL share prices fell significantly, leading to a loss even in futures. Now, Avnish Mishra told SFIO that Puneet Dalmia had agreed to cover the losses and absorb them, but instead he reneged on his assurance and instead launched legal proceedings against him. Since the securities had been unlawfully pledged by listed entities, there was no board resolution according to SFIO. A cover-up was naturally necessary. So the SFIO report says that three entities linked to Puneet Dalmia, CoinTribe Technologies, Vinimay, and Glow Homes were used. Now, there are pages and pages of very detailed transactions of what moved how. We are not going to get into that because we'll keep the video short and as much as you can understand. But this report exists. These three companies were used to record fictitious profits of approximately 45 crore because they couldn't say they were making losses. This was done through fabricated contract notes issued by Allied Financial. The report has detailed email trails indicating Dalmia Bharat's treasury team had supervised this fabrication of contract notes. It also references communications showing a downward revision. Now, you made losses, obviously, they're not going to earn that kind of money. So, at one time, apparently, the guaranteed return was 2.5%. That's what it says. And it was reduced to 0.6%. When it went from 2 to 2.5 down to 0.6 is all there in the report. I'm not getting into it. But all this reinforced the finding that the arrangement with Avnish Mishra was structured and monitored by the Dalmia Bharat Group, and they have repeatedly said in the SFIO report the buck stops at Mr. Puneet Dalmia, the managing director. It also uncovered other unlawful financial flows. They included a payment of 50 lakhs to Serendipity Arts Foundation, where Puneet Dalmia and his wife Avantika Dalmia are listed as patrons. This was made on instructions by the DBG finance team and they have documents. Separately, a payment totaling 1 crore was made to two foundations in 2018. One of these got 50 lakh, which was Avani Foundation, which is named after Puneet Dalmia's daughter. Now, these are significantly smaller amounts. Why? Because apparently these are distributor commissions, which under the mutual fund code of conduct are not supposed to go to people, but under the directions of the group, went to foundations supported by Puneet Dalmia. It also identifies instances of fictitious profits and other financial benefits credited to the account of Vijay Kumar Agarwal from the finance team. In 2018, you know what happened. Uday Kotak was appointed on a new board, the IL&FS board was sacked, and a resolution process began. That is the time, in fact, soon after, when this allegation was made by Puneet Dalmia and Dalmia Bharat Group about the 350 crore fraud. And things went topsy turvy. People said, oh, look at this, yet another fraud by IL&FS Securities. And this prevented IL&FS Securities from recovering 416 crore in margin money, and of course, all the legal costs that were incurred after that. SFIO's investigation further alleges market manipulation in April 2017, leading to a gain of approximately 600 crore. They say that an entity called Himshikar Investment, linked to the DBG group, engaged in concentrated buying of DBL shares, pushing the share price in a short time from 1972.75 to 2113.40. These transactions, concentrated purchase was done through Allied Financial as broker, and this 350 crore which was pledged was apparently the margin money. Now, what was behind this? At around that time, Dalmia Bharat Group had entered into a structured transaction with KKR Mauritius Cements Investment Limited to buy back a 15% stake in Dalmia Cement Bharat Limited. This was signed in Jan 16. This agreement apparently was structured in a manner called a placement letter, where if the DBL share price went up, Dalmia Bharat got better returns. And that's why manipulated it to push the price up. All this should be ringing alarm bells at the Securities and Exchange Board of India. Remember, this report has been shared. The MCA order says share it with the National Audit Authority, with SEBI, and with the CBI. And the report is detailed, investigation is done, action has to start. But no action has started as yet. In fact, the SFIO report has granular evidence, emails, WhatsApp messages, call records, NSE trade logs, forensic audit finding, pages after pages detailing and analyzing multiple violations that should have triggered all these investigations. Because a copy of the report is available, I have seen it, the regulators have 100% seen it. Now let's summarize. What does it say? 1. Filing false complaints alleging theft to mislead regulators, leading to obstruction of justice and preventing the recovery of 416 crore in margin money that was legitimately advanced by IL&FS Securities. Second, participating in an illegal fixed return scheme in violation of SEBI rules. So the broker offered an illegal scheme, but on the other side was the listed entity. SEBI rules violated, board unaware, perhaps, we don't know because no investigation. Third, unauthorized pledging of mutual fund units without board authorization. This 350 crore where they're accused of fraud, nothing has happened. Fabrication of contract notes and financial statements in these companies. Cointribe, Vinimay, and Glow Homes to report a fake profit, again at the direction of the Dalmia Bharat team. Alleged insider trading linked to acquisition plans, which we talked about, the Binani purchase. Purchase of BBL futures was done to push it up. Market manipulation and price ramping to get a better deal through the Himshikar investment, which I talked about earlier. In addition, fabrication and backdating of general body records. Apparently, the SFI report says this was in the 1021 crore acquisition of a 26.7% stake in OCL shares by Dalmia Cement Bharat on 25th February 2015. And there's a whole bunch of allegations about how the general body was held. Less important, but again, fabrication which SEBI has to look at. Misuse of a listed company's treasury for personal gain. 40 crore went to companies, and passbacks also went to foundations. Related party transactions, again, of this 1021 crore. SFIO says 14 out of 22 holding statements were fabricated on the letterhead of the NSDL to alter the address and amount of securities. Now, what does all this mean? The false allegations effectively weaponize the regulatory and legal process. Why? Because it's a large group with a reputation. When that makes allegations, you assume that all the small fry, including a beleaguered IL&FS securities, are at fault. So there was misdirection, and the regulatory process was in fact inverted and turned on its head, leading to the arrest of Avnish Mishra, arguably on legitimate grounds, but innocent officials of NSDL and IL&FS securities face prolonged investigation, loss of reputation, and harassment. Nobody is there to look at that damage. SFIO has just said it was completely false. There's no action after that. In February 2019, SEBI did some minor actions. What did it do? After it was very clear that Allied Financial was running this illegal scheme, it stopped it and imposed some minor penalties. The bigger issues which have been given to it on a platter by the SFIO, there's no action as yet. The regulatory response is slow, very clearly. Now, SFIO has produced a detailed report and arrived at definitive conclusions. You know how things move in India? Typically, when a large group is accused of anything, any wrongdoing, and these are really serious allegations, it is contested every step of the way. This is going to be a prolonged litigation that will go all the way to the Supreme Court. It could last for decades. It's an unequal battle because on one side, investigative momentum fades. The people who did the investigation change, retire, get transferred, institutional memory weakens, and nobody cares on the government side. On the other side, you have high-powered lawyers who are going to keep contesting it every level. And here we have a case where the regulators haven't even started acting. Conviction rates in India are low, but at least action has to start. And regulators are dragging their feet despite this explosive SFIO report. Where will it go? It's anybody's guess. These days, I find it extremely disheartening, but it's our job to at least report what is an official finding by none other than a body like the Serious Frauds Investigation Office. Thank you. Please do share and subscribe.